Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And when it comes to news for EVE Online this week, we have the Lunar New Year event that has started. There's a login reward system again with some pretty cool skins at this point, very nice, and there should be some sales and things like that to look forward to as well. Other than that, the new Rifter is up, I think, for this release as well. It hasn't changed that much, but that's kind of normal. The Rifter is one of the most iconic and recognizable ships in EVE Online. It just got a nice high quality setting to it at this point, so pretty cool, of course, that CCP keeps pushing the envelope on the graphics, which is one of those things that we all love in this sci-fi universe. So looking forward to other ships getting that treatment as well. Next up, let's take a quick look at the New Eden store. As I mentioned, there should be some sales. There's even talks of skins for one plex and things like that. We don't see that here just yet, but we do have a few Dragon Phoenix skins that are up for sales, 30% down. Not bad. These are definitely pretty unique and cool looking skins, and you've got the Ishtar that's among the list, so it might be something to look into. Other than that, I'm not noticing too much. And then when it comes to these services, I mean, there's these minus tags, but these are just because of group purchases. So we don't have any other sales happening right now in the New Eden store. There might be more stuff for you to do on the website. So let's take a look at the market. That might actually give us a bit of an idea as well. So we'll just dive straight into the pilot services coming in at 145. There we go, and we will start with plex. Above 5 million for the sellers, 4.7 million for the buyers. I feel like that's a little bit of a pullback, and we can see right here that we have gone above the 5 million for the 5-day moving average, but that at the tail end we are clearly hesitating to go any higher. And then today's average is quite a bit lower at the moment, just above the buyer's price of 4.75 million. We'll have to see, of course, how everything shakes out during the entire day. I feel like the average prices might just stay above 5 million, but there is a little bit of pressure compared to the jump that we had over the last week. So I think a sale is happening here somewhere that is pushing prices down a bit. Next, we have the multiple pilot train certificate. That's also clearly under pressure a little bit over the last couple of days. Now, difficult market to read with these very small volumes. They're up a little bit at these higher prices, so something might be happening here as well, but it doesn't look like it's a huge sale or anything. 1.9 billion for the sellers, 1.8 billion for the first buyer. Going down quickly, 1.6, 1.4, 1.3, 1.1. So you can clearly see that this is a very small market that doesn't move that much, but there should be some correlation here between the training certificate and the plex price, of course, because it basically does the same thing potentially for like an alt character. On the skill extractor market, we do have a very sharp move, of course. That was a big sale that pushed the price down below the 400 million mark. We are starting to recover from that. Volume-wise, this does feel like a pretty big sale, but I think everything else is at such high prices that we will get back above that 500 million mark pretty quickly. Sellers coming in at 485 already, buyers following up at 436. You could say that this is a healthy margin. And someone actually corrected me there. I keep saying margin, but it's actually spread between sellers and buyers of around 50 million, which is over 10%. Is actually larger than what we've usually seen. But this is a pretty large move down that is being corrected, and there's always a little bit of lag. So I do think that the spread will close up very quickly. Once sellers get back above 500 million, buyers will have no choice but to follow suit and go up in price. So I'll try to correct myself there. Next, we've got the injectors. Here are the large skill injectors that are going back above 900 million as well. So despite the very big and sharp move again in the skill extractors, you can see that the large skill injectors are basically shrugging this off. Just a small bump below 900, stint below 900 million, and already back well above that. Sellers coming in fact at 930 million, but a little bit of a lingering effect that I'm surprised by. I thought we would close up to the 890s for the buyers, but they're still at 865, leaving a bit of a gap here yet again. That has a little bit more staying power than what I thought. I thought we would get right back to these upper price ranges and very small spreads. Next, we've got the small scale injector. I really have to fight against the habit here, but I will try to do that. Small scale injectors back above the 190 as well. 190 million for the sellers and 173 for the buyers. That again, actually, I would have thought we'd close the gap with a 10 million spread or something like that. But no, it's lasting a little bit longer. So you still have a slight opportunity, I would say, to jump in on maybe slightly lower prices, but know of course that from experience we know that when the daily averages are above the 5-day moving average, it's very difficult to get some of the cheapest buy orders to trigger. So overall, I would say the market is shrugging off most of this lunar New Year action or potential action quite easily. And yeah, Plex is sort of hesitating a little bit, but we're not seeing any real crashes or anything like that. We still have the daily alpha injector. Something might be up there, and yes, something that I've been expecting for a decently long time actually has started to happen here as well. We moved up above 50 million ISK for the daily alpha injector for the average price. Sellers are at 52 million, and that's a spread that we're more accustomed to in the pilot services market. 49 million for the buyer. So really, demand is quite high here as well. While just in the last couple of weeks, we were still comfortably between 45-50 million for the daily alpha injectors. All of a sudden here in a matter of a week we pushed straight into that 50 million range, and the buyers, they really have no choice either here to get very close to those sell prices. So that's a big change, and here again it is going to be interesting to see if CCP decides, or when CCP decides to move in on the daily alpha injector market, come out with another sale and try to bring the price back down for, I think, alpha players that do make this their daily goal. I think this is something that personally that is on the radar from CCP, and it's been decently predictable when we reach 50 million. There's been another example before this on the chart over a year ago. Here it took us a while, but of course CCP needed to give the market a little bit of time after the changes to the real life prices. But I feel like below 50 million is a price where CCP likes to see the daily alpha injector. So perhaps Valentine's Day might be a place where something like that could happen. If you've been buying these to sell, it is, I think in my opinion, time to start looking at sell opportunities to take some profits. Finally, we've got the hypercores that also jumped up and are now starting to come back down a little bit of the same jump as Plex that might get undercut a little bit by some sales and things like that. But overall, again, we are very, very expensive. 590,000 for the sellers, 500,000 for the buyers. Still a decent spread here between sellers and buyers as well, but this of course coming from a 1-year high point that needs to be absorbed by the market, and we are sort of still trying to find ourselves that new range for a lot of these pilot services. This in a storm of a new expansion, potentially I think a very cool feature coming as well with the allegiance system, and of course a lot of potential sales still happening early on in the year here, for instance with the Lunar New Year. So we'll see how all of that moves, but I would say at the moment very expensive, and on some items I would not be shy of looking for some profit taking. Next up, we've got the mineral market coming in at 845. There we go, and here we've got a little bit of a surprise, because I noticed that a first keep star is down. We've got some potential super capital action and a little bit of nullsec action as well, and despite that, look at here, titanium. I was so happy that we were still able to sell above 4.5 ISK here, that I felt like that was a really good price, but now over the last week we had to give back quite a bit of terrain here. 429 for the sellers, 422 for the buyers as well, and it's just too much volume, right? 178 million, another 400 million, another 500 million, and then down here that's actually a little bit more reasonable, but you still have that 2 billion units here waiting at 470. That is going to pin us down at the lower bracket for a little while, I think. But overall, to me, a little bit of surprise that we actually get lower prices while we see a little bit more action, rumblings and losses happening in Nasdaq, at least as far as I'm able to tell from not being in Nasdaq but just reading about stuff happening in EVE Online. That does mean that titanium basically moved and caught up to the pyrite movement, which for the last couple of months has steadily been losing terrain and heading for that 10 ISK, and we in fact have a day where the average price is below the 10. At the moment we are still just above that 10.20 for the sellers, 9.70 for the first buyer, but then it's 9.29, so I do sense a lot of pressure, and if those sellers eventually give up, come in at a 9.99, then I think we could be looking at a completely different pyrite market that will start to move steadily below the 10 ISK range. And that also means that titanium has basically caught up to the movement of Mexalon as well. That has also been steadily losing value over the last couple of months, putting the price at the moment of just above 60, with a couple of daily averages again below 60 ISK, which has apparently, you can see the reaction after that with more volumes, I think brought some buyers into the market as well. 62.78 for the sellers, 60.01 for the buyers. So we're really defending that 60 ISK, and apparently there are some, I would say, traders, maybe buyers for production as well, that are seeing this as an opportunity. Whatever is below 60 is absolutely worth it. But now that all high-sec minerals are struggling and have been losing value for the last couple of months, I think high-sec miners, and I've actually done a little bit of mining in high-sec as well last week, have to make a choice. And for me it would be, I'm gonna start to sell a lot less. I'm going to wait for better times, hope that if enough of us decide to do that, we can actually lower supply enough to actually get those better prices to come in. But I would say I would only sell if I absolutely need the ISK, and otherwise I would start to move my reserves into the trade hubs, waiting for better time without selling immediately. Let's move on to low sec. Here is the Isogen charts comfortably above the 500 ISK. A little bit of pressure maybe at the tail end, but very narrow spread on the chart at least. We're talking 533 for the sellers, 507 for the buyers. That's definitely a pretty small spread, and someone might have just given up here 2 weeks ago. That is going to keep us steady, but losing patience, not really willing to spread things out. 232 million units at 535. Now, if these are old reserves, that's a huge profit margin, because we are of course plateauing at the 1 year high point. But there were, if I'm not mistaken, some more optimistic ones. Yeah, at 650 we got another 400 million units in the wait. But you can tell, I feel, from the rest of these volumes, right, 3 million, 1.5, 2 million, that these are at this point likely to be close to the final reserves of Isogen that are still keeping us in check. Once we get rid of all of both of these, it's really only two of them, and we get into that normal supply demand cycle, we could be set for higher prices, and maybe that 650 is not that crazy of a bet either. Will it get there within the next 40 days? That's going to be difficult to do, I think, with another 230 million to chew through at 535. But overall, I think that we are going to get periods of hesitation, because any of these volumes coming in that are actually spread out, putting actual pressure on the prices, is going to have this effect. So we're no longer going to see that straight up trajectory. But the overall picture, I think, is eventually we're going to really run out of these old reserves, and then we are going to settle at an even higher price range than what we see here for Isogen. That is my personal expectation of the market. It's going to be a bumpy ride, but I still think it is going to be upwards potential in general for Isogen. Then we've got Noxium that is actually losing a little bit more ground and losing the 1000 ISK as well. 975 for the sellers, 930 for the buyers. But here you can see this is more the regular market action. We don't have, we get a couple of 10 million unit sell orders, but we don't have 200, 400 million units that are waiting. So this is the situation where eventually Isogen is going to find itself. And then I would expect both of these to start moving a little bit more in tandem with each other, because basically they're sourced from the same places, and we should see that same dynamic move in there. Then we've got nullsec, which has of course also been very interesting. Here is Zydrine continuing to lose ground as well when it comes to prices. Had a high point of 3000 disk, extremely expensive price, but I think here now we are starting to see that extra supply that CCP decided to put in the game to very specifically fix the first bottleneck for capital ship production, which was, at least from their data, Zydrine, Megasite, Isogen, and then a little bit of pyrite as well. I'm not sure why they put that in there, but alright. So Zydrine is losing a lot of ground. 2,400 for the sellers to 142 for the buyers as well. Definitely well down from the peak and probably in line with what CCP wants to see, because they are again more active on the levers. And then Megasite doing the same thing, also coming down towards the 2.5, 2.6 actually for the sellers, 2.5 for the buyers. So a little bit more breathing room for the producers, especially those that want and need Megasite and Zydrine. So if you're producing in ISIC, I think you are very happy with what you're seeing here. But we can clearly see now that the targeted minerals, Megasite is down, Zydrine is down, and even pyrite is continuing on that downwards trend as well. I think here that fresh supply is going to be not too consequential compared to high-sec mining, but the one that's standing out is that the Isogen was on the list as well and had an immediate market response, but then is the one that's holding on the best, which is I think another reason to think that the actual potential, take those 200 plus million orders out of there, is actually up for Isogen. So that's becoming potentially our prime bottleneck for Tech 1 production when it comes to the minerals. We still have Morphite to take a look at. That went back above 40k and is going back below 40k, and this is also a little bit maybe more of the chart that you should expect in a healthy supply demand market situation. You've got high points, you've got some low points as well, but you definitely have a wavy pattern where, well, higher prices bring in more supply, more people make effort to bring in Morphite, and then lower prices below 40k apparently seems to be the price where the market says, no, I'm not going to bring in any more Morphite. We need a little bit of time for everything to be absorbed, and then you go back above that, which brings in more supplies yet again. 41,000 now for the sellers, 39,000 for the buyers, and that does mean that I think we can start to look perhaps into buying Morphite at the right time. And I would say if we look at the minimum prices as well, that you can get pretty close to 35,000 if you spot the right day. So then you do have to keep an eye on the market on a daily basis, but you can already see here how the spread is also starting to come down towards 37.5. Once we break that, I would say this is where you could try to buy Morphite below 37.5 and then try to sell as close as possible to 32.5, and you've got perhaps a nice cycle where you can more predictably make some trades as well. This used to be 10,000 disk, by the way, buy below 10k and then sell at the high points, but the market has clearly changed substantially from that, from those old days. Let's move on to PI next, coming in at 1805. There we go, and yeah, let's just see if this is continuing, because as I mentioned, we've got some losses happening, some big losses happening in nullsec as well. If those need replacing, you would expect more pressure on the raw materials as well. And well, here is broadcast nodes basically coming back down from another close to 1 year high point, basically matching that above 2.5 million. Sellers coming in at 2.4, buyers at 2.1, but extremely expensive broadcast nodes, a little bit in line with losing a Keepstar, if I'm not mistaken. That takes a substantial amount of advanced PI materials and some super capital potential action as well. All of that might mean some more preparation from some players to replace their losses. Construction blocks is also stopping the descent and is flirting with 10k yet again. Sellers coming in at just below 10k or just above 10k, buyers at 9,550. So the spread here, less than 500 disk on something that costs 10,000 disk, is not a lot, showing in my opinion that strong demand is still a reality in PI. We've got coolants that managed to bump onto the 10,000 disc mark and is now back up yet again. 10.5 for one seller, probably someone that overfilled a buy order, because it's 11,340 for most sellers, 10,460 for the buyers. So, oh, and I should really do this as well so we can take a look at the Tranquility Trading Tower. But yeah, most more aggressive buy order is actually still in GDAP 4.4, so lots of demand, very expensive prices, still a reality here. Enriched uranium continuing to give back a little bit of ground, but that's again quite relative. We started off from a one-year high point at 15,000 disc for refined PI material, 50% above what I would call to be a good price, especially considering the last couple of years for refined PI. So we are still at almost 11,000 for the sellers and above 10,000 for the buyers, showing that narrow spread, strong demand and a very good price. This might just be the market moving a little bit, some players producing more enriched uranium, considering that they are making even more ISK from that, or were making even more ISK from that than, let's say, coolants. Then we've got our integrity response drone still hovering comfortably above 2.5 million, 2.7 to 2.7, pretty much. Again, that super narrow spread here between sellers and buyers, very high demand even at these high prices. Our mechanical parts are staying comfortably above 10,000 ISK as well, and yeah, just a 300 ISK spread here, so that's not a lot. Miniature electronics 15k, losing a little bit of ground on that, I think is normal. 14.8 for one seller, 13,000 for another here. Again, might be an overflow, or might be just a very aggressive seller that says, I want to have my ISK now. 12,250 for the buyer, that's like only 500-600 ISK above the buyers. So I think well, it would cut into up until the 12,000, but if you would at least partly do an immediate sale, I think considering the taxes might be better off, but alright. Miniature electronics losing a bit of ground, but again from a crazy high price point. Nano factories going up again, best price for the last 10 months or so at 1.2 million, buyers forced up above a million as well. Organic mortar applicators above a million, so highest price point again for the year, very narrow spread. Recursive computing module 1.5 million, 1.4 now for the seller, so a bit of pressure, but again a bit of pressure from a one-year high point. I think that's just supply and some traders cashing in on their positions. Robotics holding on, or trying to, on the 90,000 ISK mark, 92,000 for the sellers, 87, so the spread is very narrow. We never made it to the 100k that I was personally hoping for, but this is still, I think, on the one-year chart a pretty damn good price. Rocket fuel 15,000 one-year high point. I mean, I think we can clearly see the trend here. Self-harmonizing power cores still above the 2.2 million as well. Just below that one seller, but yeah, most of them are well above that. And here are the buyers as well at 2.2 million. Smart fab units, also not 100,000 ISK, but still selling at the moment for 88 to 75. So buyers have closed up the gap a little bit here. Very unsteady volumes for the smart fab units does mean that this one can have some weird days as well. Sterile conduits are doing, well, pretty damn well on the one-year chart, of course, coming from a crazy peak up to 2 million ISK, currently at 1.4, buyers at just below a million. They're trying to bring that back down a little bit, but yeah, we are very expensive. Supercomputers are taking off from 100,000 ISK. Oh my god, another one-year high point, 120,000 for the sellers, 110 for the buyers. So a 1 week move of 20% to a one-year high point, and then that gap is just completely followed by the buyers. They have zero choice, they're desperate for PI. We got synthetic oil continuing to climb as well to 15,000 ISK. Most sellers, in fact, at 16,500. First buyer here at 12,500, so he is a little bit aggressive maybe, or again desperate to grab any synthetic oil, but here 9.4, so they are waiting before jumping in on these even higher prices. Synthetic synapses, one-year high range as well, 125,000 for the sellers. Transcranial microcontrollers, also one-year high point. This might be event related. Water-cooled CPU holding on at 7.9 for the sellers, 7.7 for the buyers. So again, you can see that the demand is there, despite this also being an item that had very unsteady volumes, a very low price compared to everything else in the refined PI materials. But we have gained that 50%, and while volumes are going down a little bit, overall I think we are still extremely expensive. And then finally, the wetware mainframes yet again climbing to a one-year high point at 2.8 million for most sellers, 265 for the buyer. So for the PI materials market, it's still an incredible market for those that can produce and bring this to the market effectively. Keep one thing in mind, I personally am a little bit worried that this might become the real next bottleneck for production in general, but of course especially capital production, but it's also structure production, especially these advanced PI materials, and that CCP may make a move on that. I've been saying that for a couple of weeks at this point, and we're still in the very good times with even more high points at this time of the market. But if you're in it for trading and not just for steady producing and making risk on the long term, then I would personally consider taking some profits off the table, which you undoubtedly should have at this point. Next up, advanced moon materials, 25.45. There we go, and this is of course a different picture, but oh, that's definitely interesting. Crystalline carbonate continuing to climb towards 200 disc and in a one-year high point range. 210 in fact for the sellers, 190 for the buyers. Definitely a break, because we were already jumping up to a full recovery above 150, and then we are continuing to climb to even higher price points, while the other carbides were not doing this. So maybe for some reason crystalline carbonate is the first one to really struggle with the new supply situation. Perhaps it's because of where crystalline carbonate is being sourced, or it could also be that this is the market that had the least reserves to weather the crash, and this, or the crash in supply, which is of course CCP's nerf of moon mining. So it's going to be interesting to see if the others are still doing their own thing, or if they're starting to buckle as well and showing higher prices. So we've got Caldari next, which is titanium carbide. Nope, still holding comfortably below the start of the price of start of year. It is a recovery, but it's not too crazy at 140 for the sellers, 139 for the buyers though. That clearly is putting some pressure on the supply. So I would not be surprised if we're talking about still reserves that need to be chewed through before we also go to these higher price points. What is Minmatar doing with Ferrite carbide? Plateauing at 150 as well, but what's the spread looking like? 149 for the sellers, 146 for the buyers. Definitely a lot of demand even at these high prices as well. And then tungsten carbide for Amar is buckling, and this one also clearly showing signs that nope, we can't sustain 150 either, taking off into the stratosphere. 228 for the sellers, 166 for the buyers. So they're not at like a 200 disc for the buyers just yet, but they clearly just blew through the 150 price range, and so we are at the one-year high point for a second advanced moon material, another carbide of course, which is in line with the pattern that I've been probably trying to spot, but I was never really sure. But I'm becoming more and more convinced that this is exactly what's happening here, is that the nerf to the moon mining will be felt first, and was immediately responded to by those cheapest items that are closest to the source that's actually being mined from moon mining, and that it will take some time to ripple through to the more complex, more expensive parts of the market, which does mean that there are still sell opportunities in all likeliness later down the line for instance metamaterials and things like that. But yeah, if you had a little bit of patience, then right now you could sell tungsten carbide at a way better price than what you did right after the nerf and when the market had its jitters. So this might be a bit of an underestimation by the market. This is at least the second one that is showing this pattern. So it's going to be interesting to see if eventually the Caldari and then the Minmatar ones buckle as well and go to those really high prices, one-year high points, and of course nice sell opportunities for those that have been buying advanced moon materials during these crazy low prices. Then we've got are metamaterials. For Galente, it is photonic metamaterials, so full recovery as well, plateauing here. But again, my investment was in metamaterials, and I'm going to wait. I'm going to wait until the wave from the carbides hits the metamaterials markets. That's my hope of what will happen. I may be wrong on this, of course. This is pure speculation on my part, but that's a trade that I'm looking for. Maybe even something close to a 15k if we try and get a similar chart as before. If we can reach 15k, let's say, I definitely sell. 11,560 for the sellers here, 11,330 for the buyers. The pattern that I am seeing is a very narrow spread, which does mean strong demand even at these relatively high prices on the 1-year chart. For Caldari, it's non-linear metamaterials. You can see that this one is still not fully recovered from about a year ago, so I think it has upwards potential. 13,300 to 12,170 even has a larger spread than what you would expect. So this is like the counterpoint, right? Why are these metamaterials not moving? Maybe supplies are still ample and it's not going to be a problem. But personally, I don't think that's the case. For Amar next, here is terahertz metamaterials, showing again signs that in this market something is happening and rippling through the whole chain, because we are back above 15k, full recovery, and close to a 1-year high point at 15,750 for the sellers. It's a supply problem, and buyers are above 14,000 at this point. And then for Mimitar, I think I mixed those two up. We have again the opposite picture, because we went to 15,000 disc and then we're actually trading at a lower range, 12,430 to 10,850. So a little bit less interest here, and no sign of a lack of supply or anything like that. Let's see if we can spot anything else in the other advanced mode materials. Here are the fermionic condensates, again landing on 37.5. That still seems to be quite amply supplied as well. Then we got ferrogel also coming down slowly from the high point after the nerf announcement, basically. Fullerite though, 700 disc, close to the source, full recovery at 700. A little bit of profit taking, I think, happening here to push us down to the 660 range, but we are already back, 725 to 651. Hypersynaptic fibers are, have gained and are not losing even. In fact, are we at 7.5 now for the sellers? Yep, 7.6 in fact for the sellers. So here again, this might be another sign that something is rolling through this advanced mode materials market, and the higher the complexity, the longer it's going to take, but getting closer and closer to that full recovery here as well. Nano transistors jumped up to 4K, lost a little bit of ground, so we're back below 3,000 discs. So here, nothing too great. I would say patience might just be the ticket. Same thing with phenolic composites, bit of an overreaction. And we are now at 1330 for the sellers. Pressurized oxidizers actually plateaued here for a couple of weeks at the 1-year high point, so losing ground again. Maybe I think some profit taking happening, 11,130 to 99. And then our reinforced carbon fibers slowly doing the same thing. And then we've got our ceramic fibers are still above 300 disc, basically almost a full recovery here. Started the year at 350, not that bad, but you can see that we're losing a lot less ground in the cheapest stuff. That's my read on the market. I would love to get your input if you think I'm right or wrong on that. But I think now we're starting to see some real jitters here. For instance, with of course the crystalline carbonite showing that very pronounced 1-year high point. And is this an anomaly? Is this more due to what's happening in Nosik, perhaps in a very specific region where a lot of crystalline carbonite is normally produced? Or is this a first one that is chewing through the old reserves and the backlog of stuff that they still had? And is this something that will ripple through the market, which is what I personally think will happen. Let's see if the Tech 2 ships agree with me or not. Coming in at 33.45. There we go, and let's start as always with the Basilisk. Well, it's moving up a little bit, and I would say the good news is, at least here, we are at a higher price point than in the last 1, 2, 3, 4, 5 months. Or almost 6 months. 141 million for the sellers, 123 for the buyers as well. Now what we of course are hoping for is that there are enough basilisks out there to crash the price back down to a pronounced buy opportunity, and now we can then start moving in bigger and bigger waves. But for now I'm happy with a higher price point than over the last couple of months. Cerberus, well, had a little second wave as well above 150. He's starting to come back down, and our buyers below 130, 137 for the sellers, 125 for the buyers. So if you still want in on a Tech 2 trade, I think a 125 for a Cerberus, and we're on the right side of the charts, because it'll still be pretty difficult because we are starting to flatten out here. But if you can grab a Cerberus below 130, I still think that potentially you've got a trade. If I'm right on that rippling through the whole market, eventually it should hit Tech 2 ships as well. That will then make a high point that is sellable. We've got the curse also, plateauing, but unfortunately you could have bought these below 130. Here you had a day where that was happening as well, but that spread is already lowering. So again, when the daily average is on the left side of the 5-day moving average, that's when you can get your best deals. Now we are matching this again. The spread is lowering, and as a result it's going to be tricky to do 140 to 131 now. For the curse, I would say hope that another peak goes up above the 180 or close to the 180, and then sell and look for another downturn before jumping in. And that's good news. I think here is the damnation. All of a sudden, 1 week move to well above 350 million, and in fact a couple of days at 380. Sellers are currently coming in at 358, so again a bit of profit taking is happening here. 294. The unfortunate thing at this point is that it's not more than this that's coming in on the supply to crash us back down and to maybe create like a below 250 buy opportunity. That's not happening, so they might be a little bit too careful. But I would say if you have bought, like me, a damnation, I think it was below 250, because you could have bought that here, very clearly here, you are looking at already a potential 100 million ISK trade on a damnation for you to take profits in. Is this too early then to do? That's a difficult choice to make, of course, but another sign that some more volatility might be brewing in the Tech 2 ship market. The Deacon is also moving away from that low price point finally, so another sign to me. This is the smallest logistics frigate. Market has been anemic. It is a MAR as well, which has had a tough time showing volatility. And yet this one is clearly now starting to take off as well, selling at 16.5 million, buyers at 14 million. And you could have bought these down here probably 12.5, 13 million pretty easily. What are we at here? 14 point. It's a small profit on some more volatility. You could of course get even more out of it, but the cheapest prices are clearly starting to be over. The Eagle also moving at the 150 range. Let's see what we're at now, 145, and I still have 1 hour, so that should be all right. 145 to 131. But another wave, right? Here's the wave below 150. Here's the wave reaching 150, and then let's see how the market responds with supply. Can we go to a nice low point again and start our trading, or will that become a problem? Next, we've got the EOS. That's pretty interesting, right? You can definitely match me here. 274 for the sellers, 238 for the buyers. If you're looking for a jumping point for the trade, we're on the right side here for the daily averages. You can clearly buy, I would say, a 240, and you're probably going to be able to buy one EOS, right? Don't try to buy a dozen of them or anything like that at this point, but there is that potential that if the pattern holds up, and this one is just a little bit late to the party, and you can also see what happened to the Galente side of production here, that you can get maybe like above 300 million, I think for sure, but maybe like a 350, and at the moment you're buying at 240. That's another one of those 100 million trades potentially on command ships. And this is of course what I personally am hoping for, is that on the downturns of these higher price points, we actually do get some days where you can get really cheap ships, because there is still a lot of them to create that situation. Too many people trying to take advantage of those high price points will crash the price down. You can snag a couple of cheap ones from desperate people at that price point, and then of course you have to time your sales correctly. The Aries, Ooh, love to see it. There we go. 75 million for the sellers, 42 million for the buyers. Probably some Nelsik action at play here as well because it is an interdictor, but nice sell opportunity, 1 year high point. And yeah, if you bought below 40 million, I think you are looking at that awesome trade. So we are clearly moving away now from the dynamic that we've been stuck in for a very long time, which is buy the cheapest chips, be ready for better times. I would say that's the mode that I've been in. We are clearly at this point, I think, gonna be switching to look for the sell opportunities, hope for those crashes, try to find those low price points as well where you jump back in on the market and get back into active Tech 2 ship trading, because this is a 1 year high point, a very nice, very sharp wave as well. This is, I think, what all those that want to trade in Tech 2 ship are looking forward to. Here is the flycatcher. Well, still not doing a lot, but I would say then the good news is look at that spread actually going higher and below 37.5 million. We're talking 43 to 36 million. So still, in my opinion now, a small opportunity to jump in on a cheap flycatcher if you haven't gotten any yet. The Guardian then, right, selling on average at high price points, but again, starting to come back down. I would have a little bit more patience, right? I would, of course, love to see us get close to 100 million again. I'm not sure what we're going to do, but I would say at this point, buyers are at 120. Yeah, and maybe that's already the new jumping point for these, but I would say have a little bit of patience, hope that we can shoot through at least some of these and get close to a 115, 116, something like that, and then hope that we can again go to a higher price point after that, maybe even a 150, and we're looking at tradable waves. The Heretic starting to move back up very slowly, so that's not exactly the spot that's too interesting. We saw last week that there was a trade to be done here for the Hound at 24 million. We're starting to see some pressure. Minimum prices still pretty low, and we would love to see those close to 15 though. They're at 17 almost, so that's a little bit too early. You do need again to time the markets, which is not that easy. Then we get the Iquitursa 536 to 505. Definitely not the cheapest Iquitursas at this point anymore, so Triglavian wise supply is not doing that great. Ishtar, small timid little bump up above 160, coming back down on the 150, buyers 142. If you haven't, yeah, the cheapest ones are of course far away, and it's just really pretty high volume PvE/PvP ship trading. Yeah, I think here I would, if I were to be trading with the Ishtar, I prefer to trade in more individual ships and small amounts. But in order to make up for, I think, the very small spread that you see here quite often, I would dare to go for volume. If you do want to trade in the Ishtar, I would probably try to trade 4 or 5 at a time or something like that. Because the volume should permit that, but your profit margin is going to be lower here. Then we get the Kirin. Yep, still stuck. Logistics frigate. You can buy one below 15 million. Your choice to make. Look at what the Deacon is doing. Maybe this is still an opportunity. Then we get the Manticore. Smallish bump here again. Spread still pretty high, but moved away from that 15 million range. 19 to 16. Yeah, I wouldn't be selling just yet. I'd be waiting for another wave. But the Nemesis also clearly trending up while keeping the spread. So that's not what we want to see. We want to see more volatility. Nighthawk still above 300 million. But look at the spread trying to get back down a little bit. We're 313 to 288. Still a bit too high, I think, but interesting. And then, yeah, the Oneros, we saw that last week, is now going for 180 million, 185 to 155. So if you bought your cheap Oneros somewhere here below 100 million, which was quite possible, quite often, you still have that 80% sell opportunity right now. Purifier holding on to a higher price point as well. 23 to 19 million. So again, I would say if you absolutely need to take profits, you bought below 15, you get a sell opportunity. But I'm looking forward to even more volatility personally. Rook above 150. Not much to do here. Saber is still pretty low. You're buying below 35, sellers at 36. Look at the oversupply here. It has stopped, so we're not gonna push even lower prices. But if you want potentially in on that, where is it, interdictor bump, then we're still looking pretty good when it comes to jumping in on the Saber and buying a couple. Scalpel had its bump, absorbed, not much to say. Scimitar, still seeing some pressure, would love to see us touch 100 million, we're not doing that. Whoops, misclick, sorry about that. Still 120 or below that for the sellers, below 110 for the buyers. You know, I would say one Scimitar should be on the books at this point and can still be sleep near. That's very good news if you're looking for that volatility. Here is the push to a price above 135 million. Excuse me, 350. We're at 364 million for the sellers, 320 for the buyers as well. Look at those buyers follow suit on this desperate rush to still get a sleep near. See some volumes moving here, pushing that price. So a nice sell opportunity here as well. If you bought, let's say at a 250 range, you are currently selling comfortably with 100 million profit at this point as well. Command ships doing pretty nice work. Vagabond below 150, I would again say if you haven't bought one yet, you're still trying to grab one for 140, that's not bad. And then the Zarmast, still definitely above average, but not at the 1 year high point. So that one has been absorbed. And when it comes to Triglavian, well, it is of course its own range at around $500 million for a cruiser. But there is some trading to potentially be had here as well. It's just going to be tricky to get that jumping point for these. But for Tech 2 ships, I would say some very good signs. If I include what I'm seeing in Advanced Moon Materials, I do think that the moon mining wave is going to potentially ripple through the entire Advanced Moon Materials section and then eventually hit Tech 2 ships, where we can really look at taking some very nice profits. And in fact, from time to time on a couple of these, you can clearly see that we can take those profits already. So I'm going to switch into active trading mode for Tech 2, I believe, at this point. Next we have the Tech 3 ships coming in at 46.15. There we go. Let's start here with the destroyers, and alright, the Confessor moving up as well. Not even on a lot of volumes, but now well above 50 million. That's interesting. Biggest move in a while. It is on an exhaustion of the supply. 54 million for the sellers, 45 million for the buyers. I'm still not sure if I want to be trading in these. My read on this is there's basically gonna be a gas supply exhaustion or something like that happening because of all of the extra faction ships that are happening. Might be another thing to keep in mind as well when it comes to CCP balancing in order to keep the furnaces burning. Then we've got the Hecate doing the same thing, above 50 at this point, 60 million on a complete lack of supply of ships, or maybe even like a resets. No, this is nothing when it comes to the number of ships. And then we have the Jackdaw that is currently definitely a bit expensive as well at 52 million, 49, very narrow spread though. Let's take a look at the spreads here as well. 59 to 52. Confessor coming in at 54 to 45. That's a little bit more, yeah, but let's see what the Svepel is doing. Still very stable at 45 to 40 million. My read on this is that there is some supply exhaustion, but in general, what I believe is still the problem for tactical destroyers is that their value compared to the average Tech 2 prices at the moment is just nothing. The production cost is too high because they have to compete for their gas supplies with other and new ships as well that are of course front and center when it comes to the mindset of players and also the activities in faction warfare and things like that. So they are getting more expensive, but really just at the cost of supply, and volumes are still, well, next to nothing. I would still be looking to trade in these guys. Here are the cruisers. A Mark cruiser still at 200 plus million, 202 for the sellers, 184 for the buyers. Spread is pretty high here between sellers and buyers, and I think with Nullsec action, Tech 3 cruiser fleets are definitely a thing as well. So it might just be expensive at the moment because of what's potentially happening in Tech 3, but that does mean that if we would, for instance, here break the 180 for the buyers and you jump in there, I think you've got a very good chance at getting a trade going. The Loki is back at 200 million as well, and here exactly, if you manage to grab this, it's only on a single day unfortunately, but if you manage to grab one below 180 here, you're currently already selling it at 200 million yet again. Then we get the Proteus that's also stuck at the high point. So again, we would need to see these this spread starting to open up and buyers, let's say a 180 yet again, might not happen anytime soon because we're at 220 now almost for the sellers of the Proteus and 206 for the buyers. And then we've got the Tengu that's still at 200 as well, 200 to 187. But this is, you can see here with that large spread here as well, touched 180 on a day. This is where I personally think you can make trades, and you're actually going to be able to sell as well, considering the daily average that we're seeing here at the moment. And you could get a nice surprise, I think, from Nulsec as well, when all of a sudden they need their Legion fleet up and running, so they gotta buy even more of them. That's when we can make 1 year high points and get those real sell opportunities. Just gonna be a little bit tricky at the moment to get those buy opportunities to come in. But the spread is big enough that in and of itself, I think you can find those cheap Tech 3 cruisers. That would still be my focus when it comes to Tech 3. And then for the extra product for the week, we're gonna take a look at freighters with all that capital ship announcement stuff. So 5025. I want to see what freighter prices are doing at the moment. Should be pretty expensive, of course, but let's jump in here. Ships, then I think we've got capital ships to look at. Freighters for Amar, we've got the Providence, that's above 3 billion, ISK selling for 3.3 billion, buyers at 2.9. Bit of a spread here, but clearly on the 1 year chart we're not as expensive as a year ago, but we are well above average and expensive since basically the fall, which is also in line with very expensive Nulsec minerals and very expensive PI, of course. Let's take a look if I can spot that. If we take a look at this, for instance, we go for these capital parts. That's, oh no, you actually need to again hit the that one, self-harmonizing power core. So that's also partly where this advanced PI material stuff is in. So it is minerals, it is advanced PI, and there's the entire PI chain that's coming in here, and so we are very expensive. For Caldari, we've got the Charon that also just bumped up to a price well above 3 billion, probably 3.3 as well. Yep, 3.3 for the sellers, and buyers at 3.1 billion as well for the Charon. 6 months ago it was at 2 billion, so that is another way to ride this current resource wave where, well, they're very expensive because of that capital ship production. Obelisk is now above 3 billion as well, has been for the last 2 months, 3.3 yet again, 2.9 billion for the buyers. And then for the Fenrir, we went to 3.5 billion, we're settling at 3, so there's probably a little bit more supply coming in because of the 1 year high point that was made right here. Buyers at 2.8 might also be a slightly less popular one in general. And finally we still have the Bowhead as well, with a very bad chart, but let's try and get a look at that. And sometimes you could have grabbed these for close to 2 billion over the fall and summer, but now these are selling at 2.8 billion and 2.6 billion for the buyers. So I would say that this is a sign, it is a reflection of what we're seeing in the minerals and in the PI market. I think this will be like that across the board for capital ships. But of course, what I'm reading into this as well is that part of the reason is that there is indeed a lot of production happening with, well, not just, right, someone I think mentioned in the thread about those numbers, like a 34% increase or something like that. That, well, yeah, of course you're coming out with those new capital ships, faction capital ships, and it's all because of that. Well, we can clearly see here that this has all started earlier than that. September, August was when we started to increase in prices, and I do think that it is just more production happening in Nulsec as well of regular dreadnoughts, other capital ships, that there is a bit more of an arms race going on there with the potential conflicts that are brewing, which is of course course very good for us miners, because that does mean and PI players who regularly do their PI, because we are getting a bit more bang for the buck as well. So overall, pretty interesting stuff. Very expensive market in general, I would say, with a lot of competition, and with this, you know, new thing that we have to keep in mind is that CCP is moving away from the complete hands-off approach, and they are willing to intervene here and there. So I would say be careful with PI, with expecting these high PI prices to last forever. And potentially same thing with gas, but that's going to be for next week then, as the extra product. Could be interesting to take a look at gas products as well. But for now, that's it for this EVE Talk. Thank you very much for watching, guys, and as always, I'll see you next time.